Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso and I am very excited to be here to talk about a very brand new, issued this morning, exposure draft that was issued by the FASB related to cryptocurrency. So we are going to take a little bit of a look at this. We actually swapped out our plan for this week. We were going to talk about ethics, but because this one came out and it is a hot topic, we wanted to address it immediately. And so this week you'll be getting our crypto. Next week you'll get an ethics exposure draft. But this one has been something that a lot of people have an interest in. The current guidance around cryptocurrency is a little bit difficult for people to appreciate, especially with a little bit more volatile market that's going on right now. And so cryptocurrency does fall under the topic of an intangible asset. And so this is going to be within topic 35060. And this was again issued this morning. It is project 2023 ED200, and it is accounting for and disclosure of crypto assets. And I think that's really important because it does talk a little bit about recognition and measurement, but it also provides new disclosure requirements. And this is something that was very much requested. In 2021, the FASB did an invitation to comment, and this was one of the #1 areas where feedback was provided about wanting more information. Cryptocurrency prior to this really wasn't addressed within GAAP. There is an ANA guide that's out there that's done by the AICPA in this area. But when we look at it, there was a lot of confusion around that because intangibles are typically kept at what's called a cost-less impairment model. And because these are typically actively trading, people felt like that was not really decision useful guidance, especially with some of the FTX and other crypto type of events throughout the last few years. People felt like this wasn't really the best area. And so it was a top priority identified in the invitation to comment. And as you can see, they worked very hard and diligently on it to get an exposure draft out as quickly as possible. And so they really are trying to meet the needs of stakeholders when they provide feedback. Now, it is important to understand the scope of this standard. It is not all crypto assets. It must meet these criteria and it must meet all of them. So the first one is that it must meet the definition of an intangible asset. I think that's very important here. Obviously, if it is a financial asset, then it's not going to be within the scope. There is on-point guidance for financial assets. It does not provide the asset holder with enforceable rights to or claims on the underlying goods, services, or other assets, right? So in that scenario, again, there's on-point guidance when this is, a right to some type of good or service. They have to be created or reside on a distributed ledger based on blockchain technology. So this was sort of a scoping model to make sure that they were being addressed and are secured through cryptography. Cryptography is the term. There we go. And so as we look at this, again, trying to narrow the scope, they also have to be fungible. One thing that was added during the discussion process is that it also cannot be created or issued by the reporting entity or its related parties. And so again, this has to be something that was created by someone other than the entity who is doing the reporting. So if you meet all of those, then you're in the scope of the standard. And initial measurement, obviously, you're going to have a cost consideration here. However, transaction costs to acquire it, whether that's transaction fees, et cetera, those would be expensed unless there is some type of industry-specific guidance that would say otherwise. And very important, you would have to report this asset separate from other intangible assets. So you can't just lump this into an intangible asset category. It does have to be shown separately. And from a subsequent measurement, again, this is really what people were looking for, which is a fair value measurement. So instead of a cost minus impairment, this will actually require them to mark to market each period. And that change is going to run through the net income, right? So this is going to be something that is going to be a fair value through net income concept. And that adjustment, that change in the fair value does have to also be reported separately because we don't want to lump these in. Now, because this is a fair value measurement, not only is it subject to the disclosure requirements here, it would also be subject to the fair value requirements in general. So fair value hierarchy, all of those things would still be applicable. So you'd have to say whether it's level 1, like a Bitcoin, level 2, level 3, based on is there an observable market for these items? And so normal fair value measurement application as you would go through here. In terms of cash flow, again, as we look at this, if they're received through non-cash consideration and immediately converted, we see this a lot in a nonprofit world. We actually had a NAC meeting this morning, so kind of all comes together. And they would classify that as cash flows from operations, but generally they're not changing the cash flow rules, and you would follow the normal cash flow that is appropriate given the circumstances. But where we start to see a little bit more interest is on the disclosure side of the house. We want to know, what are people investing in terms of crypto? And so for both annual and interim periods, we would see the name, the cost basis, the fair value, the number of units for each, and here we go, significant crypto asset holding, and then aggregate fair values and cost basis for those that are not individually significant. So providing a little bit more information about what exactly organizations are investing in. And then if there are restrictions, we actually talked this morning, if you attended the public NAC meeting, they talked about an example where the donor donated it and then required them to hold it for a period of time. So in that scenario, there was a restriction on sale. So then you'd have to have, for those that are have restrictions related to them, the fair value of the crypto assets, the nature and duration of the restriction, and what could cause the restriction to lapse. So again, I think this is going to be a well-received area. In addition to the interim and annual, then we also have just ones that would be typically annual. And in this scenario, it would be a roll forward of activity, again, in the aggregate, including additions, dispositions, gains and losses of the activity of the crypto asset holdings. Now, there was questions about whether this would still require like the normal fair value hierarchy, and the answer was yes. But typically today, only level 3 require the roll forward. This would be required for all of the crypto assets here. And so if those gains and losses are not presented separately, then you are required to disclose them, which income statement line item you would be putting them in. In addition, for any dispositions of crypto assets, you would have to say what was the difference between the sales price and the cost basis, and a description of the activities that resulted in the disposition, as well as the method for determining the cost basis of the crypto. So these are annual only. You would not see these in interim. For those of you who only do annual, then both slides would cover just those annual requirements. So this is a step forward trying to meet the needs of users. And so as we take a look at this, this is something that a lot of people do have an interest in. So if you are interested in how we present cryptocurrency within the scope of the standard, or if you have feedback on the scope, I am sure they would love to hear it. And so those comments are going to be due June 6th, 2023, which is a 75-day comment period. So give you a little bit more time, obviously, hopefully get us out of busy season as we look to provide this feedback to the FASB. I'm sure they would love to hear your thoughts about this as we go through. So that's a wrap for this week's blog. I want to thank you guys so much for joining me, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.